Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday. And when you tune into my show, you're going to hear about topics that are important to the home business community. However, today we are talking about this payroll tax deferral. This has really been hot on the streets because there's just so much that is going out right now about it. So I really want to talk about that today because it's really going to impact a lot of people. So I just want to get this stuff out there because I've been seeing where somebody has been posting that no taxes were going to be taken out of your check between now and December. Folks don't have to file taxes. No. So let's talk about it. So the president issued the executive order that said payroll taxes, the Social Security part of the payroll taxes, can be deferred. Okay. Deferred does not mean forgiven. Deferred means being delayed, and which means to be put off, right? So that deferral period is from September 1st through December 31st, 2020. And so that 6.2% of your Social Security tax will not be withheld, and then there will be more money in your paycheck. But hold on, because right now the guidance is that that money has to be paid back during the first quarter of 2021. So you will see less money in your paycheck because you're going to be paying back the Social Security taxes that you would normally be due, plus any deferred Social Security tax. So yes, read double the Social Security tax coming out between January 1st and April 30th. Okay. Now, the big thing is, the big question I get is, how can I opt out? Well, you as the employee cannot opt out. That has to be done at the employer level. The employer decides whether or not to opt in or opt out. Okay. But most employers that I know of are like, we're not doing this at all, because it really, honestly, the math doesn't make sense, because nuts and bolts is like, if you are having these payroll taxes deferred, then you will be needing to save that money because you're going to have less money come the first quarter of next year, right? And also, before I forget, so government employees, all eligible federal employees and service members do not have the option of opting out. This is a government directive. The president has said the government will be participating. So all of the eligible government employees and federal and the service members will have these payroll taxes, the Social Security deferred. So again, save this money, okay? Be watching your LES when it comes out on around the 15th, so that you know what the difference is in your pay. Look at your last pay stub to see what that difference is and put that money away in a savings account. Don't spend this money. Okay, so what is the threshold? The income threshold is anyone who makes $4,000 in a biweekly pay period or less. So roughly $104,000 per year or less, you will be within the range to defer these Social Security taxes. Anything above that, as far as I know, it's not happening. There's no phasing or anything like that. 104,000 or less. And we're talking, for military people, we're talking about your base pay. Okay. So again, government people, no opting out. Civilian sector, the employer makes that decision. But like I said, as far as I have seen on these civilian streets, employers are not having it, simply because, first of all, the employer side of the Social Security tax, there was already a deferral in one of the previous acts. And so this particular directive was for the employee side of the Social Security tax. But here's the deal. If having this deferral, while it sounds great, the fact is, if you don't have the money to pay it now, you're not going to have money to pay double later, right? So this is why we're saying that, as far as in the world according to Lusandra, let me say this clearly. This does not make sense. It does not make good sense. It sounds good, but the application of this is going to be tragic. Here's why I say that. So first of all, if you think about this, when you do let's go with the $4,000, right? So $4,000 times, don't ask me why I didn't do this math already, but I didn't. $4,000 times 0.062. Okay, so $4,000 times 6.2%, that is your Social Security tax. Now, if you do that over 8 pay periods, which is 2 pay periods per month, so let's multiply that by 8. So that's $1,900, just short of $2,000 in Social Security tax that is being deferred, okay? So you should be seeing an extra $200 a month in your paycheck, right? Make sure I got that right. No, times 2, right? Right? So nuts and bolts is you're going to see that extra money and go, oh my gosh, we got all this extra money. Okay, but then when you look at what's going to be happening in January, that extra $2,000 or $1,900 is going to be coming out over that first 4 months. So then you're going to see that extra $200 now become a reduced amount, right? That a reduced $200 because you got to take that money out. Now, here's the other thing. When do most corporate layoffs happen? Anyone? At the end of the year. So, if your employer defers these Social Security taxes and you get this deferral, this additional money, and then you get laid off at the end of the year, guess what? You still owe this Social Security tax and you have to pay that money back. So any Social Security tax that's not paid back by April 30th, you will incur penalties and interest. So yeah, this is, again, in my little 1 + 1 = 2 world, this doesn't make a whole lot of sense. So yes, you still need to file your taxes, file on time. Even if you wind up with a tax bill, you still need to file. Because if you don't file, then you incur the failure to file penalty in addition to any failure to pay penalty that, if you have a tax liability and can't pay it. So definitely file your taxes. But just know that this is what's coming down the pipe. And here's the other thing I really want you to think about and be careful about. This is the fourth quarter. This is retail boss out season, right? People are going to still be spending the most money. I am so seriously going to caution you against going out and spending this extra money, right? Because the bill is going to come due. And usually what do? We go out, historically speaking, in the United States, we go out between September and December and we spend the most money, right? This is the back to school or virtual school or whatever. We're still buying stuff. Halloween is coming up. We're going to be buying stuff. Thanksgiving is coming up. We're going to be buying stuff. Christmas coming up. We're going to be buying stuff. So you got this extra money now to buy all of this stuff. But what normally happens is people run up these bills during the fourth quarter, and then they're trying to pay it off during the first quarter of the next year, whether it's using a tax refund or paying off credit card debt and all of that. And when you now see less money in your check that first quarter, now you don't have the normal money that you have to pay this stuff off. This is why I am so seriously cautioning you against spending this additional money in your account, in your paycheck. Go put it in a savings account, sock that money away, act like it doesn't even exist, because you're going to need that money come first quarter. Now, one of the things that the president has said is that he would work to have this payroll tax deferral actually forgiven. That takes Congress to do that, and who knows what that's going to look like. Okay, we have no idea. So this is why please do not bank on this being forgiven. Just don't bank on that. Make sure that you save this money. So then if this deferral, this payback period actually happens, that you have the money that you need, that you would normally have to operate your household. Okay. So I'm going to tell you, buckle up and hold on tight, because this next filing season in 2021 is going to be a bumpy ride. It's going to be a bumpy ride for everybody, just because we have had, people have lost their jobs, people have drawn unemployment and have not had taxes taken out of unemployment. So you may see some reduced refunds because you're now having to pay tax on this money that you got for unemployment, and that additional $600 pandemic unemployment assistance that came from the feds, as far as we know, is still taxable. We have not seen any guidance, any legislation that's saying, hey, that money's not going to be taxable. So if you got that pandemic unemployment assistance, that additional $600 per week, and you got money from your state and did not have federal taxes taken out, you are going to owe taxes on that money. So there may be some people who wind up with a tax bill that normally doesn't have one. Or if they're normally used to getting a huge refund, it may be a reduced refund. So this is why I'm saying this is going to be a bumpy ride going into filing for 2021. I still encourage you to file your taxes and file early, so that if you do have a tax bill, you still have some time to adjust. You can file your taxes early, and you still have until April 15th, the tax deadline, to pay that tax liability. I know some people are like, well, what difference is that going to make? Well, you got a little bit of time, right? It's better than nothing. So that's the deal on the payroll tax deferral. It is just the Social Security part, not the Medicare part. And and as far as we know, you're going to have to pay that back. So employers have the option to opt out. And as far as I know, I have not seen any employers that have said that they're going to do this. Most of the employers that I've heard about are opting out. And but with the exception of the government, and but if your employer does do this, please, oh please, oh please, save this money. Okay. So I hope this helps you out. Thank you guys so much for tuning into Home Biz Tax Talk. You can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I will see you all next time. Bye.